The Turkish Central Bank has announced a larger than expected cut in its key interest rate. Monetary authorities are taking advantage of easing inflation and a more stable Lira to give the Turkish economy more support. Lower borrowing costs help spur spending and investments among businesses and consumers. The rate cut also comes after Washington cancelled sanctions that had rocked Turkish markets. Now, the central bank slashed its benchmark rate by 2.5 percentage points to 14%. Investors expected a cut of around 1 percentage point. It's the third consecutive rate cut since July and brings the total reduction to 10 percentage points. And inflation has steadily declined this year to reach 9.26% in September. That's from a high of 25% in October last year. Well, for more, joining me on the set is Hakan Akbas. She's a senior advisor at the global strategic advisory and commercial diplomacy firm, Albright Stonebridge. Good to have you back in the studio, Hakan. Now,
good to be here.
Good to have you, as always. This is the third biggest big interest rate cut in a row for Turkey's central bank. Why did they move this way?
As you highlighted, since Governor Uysal started back in July, he has been taking the rates down, and I would tend to look at it as a front-loaded move and almost like 10 points in a matter of a few months. And inflation outlook continued to improve. As you mentioned, we're now down to single digits, which is very encouraging, and it's below the psychological threshold. And secondly, this is in line with the government's new economic plan targets, which is also very assuring. But also, Turkish lira also has been stable this year and has been stable despite the Syrian sort of developments, despite the sanctions from Washington, which has been recently lifted. So all of these actually contributed to a limited window that the central bank took advantage of it, and was definitely the right move.
As you say, this is part of the government's broader economic agenda, but explain to us, what does Turkey's central bank hope to achieve with this aggressive monetary easing?
We are seeing globally actually a slump in demand and business investments. So Turkey is also taking its share of it. And by the end of this year, probably we will be achieving maybe less than 0.5% growth. And this is not what Turkey needs, right, to create employment and to create growth. So again, based on the inflation going down and also the government's sort of target for next year as bold as 5% GDP growth. So I think that central bank governor Uysal wanted to take a front-loaded decision to be able to finish the year with the market conditions that would hopefully the rate cut would give its way to a lending in the market from the banks, especially from the private banks, and that would also lead to stimulated consumer spending as well as investments, which is what is needed, so that the entire 2020, I think, we can expect to achieve or hopefully beat 5% growth. This was very important, and also I do not expect any more cuts in December before the end of the year, because this was double the expectations, at least from the economists. And thanks to this faster than expected sort of entente with Russia and US, that led to the sanctions being lifted much sooner than anticipated, and it was a great victory in Syria by the Turkish troops. So they went for it and they took advantage of it. I think this is overall very positive going forward.
So you mentioned that you don't expect the central bank to cut rates further in December, but I'm wondering, beyond that, how much lower do you think they could go?
Again, I was expecting around probably 125 basis points today, but they doubled that. So they almost wanted to see what will happen in December and beyond. Although they did say that they want to also monitor the situation very, very closely. But if you look at the ECB or even the Fed, the global easing cycle, continues very aggressively, and I would expect another cut from the Fed before the end of the year. So all the trends are moving in the right direction, and from that perspective, it is really about now for the Turkish banks to move forward with more aggressive lending, and so that at least the sentiments from the business side is back, and at least based on everybody that I've been talking to from the business community and what I've been reading, the sort of reaction from the business community has been very positive. But we want to see this to translate into bigger capacity for lending as well as investments, because that's what's been lacking in the growth figures if you peel back the onion.
Okay, let's see if the Turkish banks deliver. Hakan Akbas, always a pleasure. Thank you.
Thank you.